Evening, guys. Good evening. Quick sound check. Can everyone hear me before we get cracking? Let us know in the comments, guys, if you can hear me. And if you can, we'll begin. Dum, dum, dum. Awesome. Cheers, Enzo. Cheers, Neo. Cool. Right. Welcome to tonight's live stream, gang. It's been a while. It feels like it's been a while. I don't know why. I think it's because I've done a Space Punks live stream in between, so it feels like ages. But we are going to continue. We are going to continue the order flow modules, continuing with TPO, and I don't know if it's a good thing or a bad thing for you guys, but we're approaching the end. We're approaching the end of TPO, which in turn we're approaching the end of order flow. So yeah, this is probably the longest one that we've going on. This is module 6 now. I reckon there's either 1 or 2 modules still to go, and then that's it. This to me is probably going to be one of the most important from what you've learned so far. This is very important. Obviously, the profiles that we did last time, they're extremely important because you can predict what's going to happen with some of them, and you've kind of got trade setups on the back of them, intraday trade setups. You know, for example, like the variations. You know, after a neutral day, if you get a variation, you know, you can counter trade that, etc., etc., etc. And this continues along that theme in a sense, but obviously we're using the single prints. Buying tails, selling tails. We're also going to look at the double distribution day because it doesn't really fit anywhere else and it fits within this nicely. Yeah, and there's a little bit of psychology in with this as well. And this ties into something that happened the other day, but it's important in my opinion. So it's going to be quite text heavy is this one, guys. I apologise in advance, but just work through it, and if you're stuck, ask questions at the end. But likelihood is you're going to watch this video a couple of times. Yeah, so hopefully I explain it clearly. So, let's start. So, single prints. As a refresher, obviously this is a screenshot from when we did the overview, the introduction to TPO. So, just so this is all fresh in your head and this all makes sense, obviously single prints are formed when price quickly moves through an area, creating single blocks. So obviously it's the letter blocks. Obviously we've got the letters, haven't we? A to X. And obviously it's going to create a single set of blocks. Now obviously, ideally we'll be moving very fast through an area. Lots of volume. And this is obviously the moves that everyone starts going, whoa, what's going on? And keep in mind, obviously these are 30-minute candles. True TPO. Now, we touched on this last time. A true TPO single print is classed as 3 or more blocks. Now, the reason why I don't like using 3 or more blocks, and I know there's quite a lot of traders out there that still use 3 or more blocks, because I actually watched a live stream the other day and someone was using that, talking about some single prints on a chart, and I thought, no, those single prints don't exist. But for me, and I know there's a few others like me, we use 5 or more blocks. And the reason for this is that crypto's more volatile than traditional markets. So keep in mind that TPO theory initially was for traditional stocks. And if you are going to trade traditional stocks, by the way, and use TPO with them, which you can do, because this is what initially it was created for, revert back to 3 blocks. So that'd be 3 blocks for your single prints, 3 blocks for your tails, 3 blocks. 3 blocks for both your tails and 3 blocks for your single prints, or more. But when you're looking at crypto, specifically, you know, obviously Bitcoin, you know, you can look at this on Ethereum. I personally don't, but you can do if you want to get into it. Then 5 or more blocks. You may find that some shitcoins you actually might want to create your own rule and increase this even more. Bear in mind how shitcoins work, but that's going to require a lot of backtesting on your behalf. Because I'll be honest, I'm not going to do it. I don't trade altcoins in that way. So obviously, this is the reason why we use the 5. So there's your refresher. Obviously single prints, and obviously we've got the number at the side of them to tell you how many single prints there are. Now, how do we trade single prints? So this is where it starts getting important. So I consider single prints a bit like gaps. So obviously we've got the whole meme in crypto about the CME gap needs to be filled, and likely it does get filled. It does get filled, but either side can act as an SR level, and that's the similar concept with single prints. So when something opens up and it gaps up, you can consider that as a row of single prints because it's effectively a gap. It's pre-market has already traded through that level. So if we can just find a good example. Let's look at SPX and we'll look at it today. So yeah, so when we opened up today, initially, look at this, great example. So this is a gap. So this is a gap on the S&P 500, and obviously this isn't based on the futures. This is the actual index. So what happened here is price opened up with a gap, similar to how CME opens up on a Sunday night with Bitcoin. We had a gap. Price opens up, it continued to rally. Now, as a side note, by the way, whatever direction the market opens, there's a good chance it's going to fade. It's very context dependent, but it's good to know this on the S&P because Bitcoin will run alongside this. So if you see this on the S&P at New York Open, and you see a rally and Bitcoin mimics it, look for it to be retraced. Just a bit of an FYI, it's a little hidden gem that. Because we've not quite got to these kind of trades. But yes, obviously we've gapped up. So technically what this can be like now is this can be like a block of single prints. And what you can see here is we gap up, we come back down, and initially we've got a bounce. So we've actually got some support here. Open this candle, then we come through it. We start to get acceptance in it, and we come all the way through to the other side. So we'll fill that gap. And effectively that's the same concept as single prints. And if you look at this, we can see right at the bottom, let's zoom in on a smaller time. In fact, let's go into the 1 minute. So we can see, look, so obviously price comes down, bounces, we get acceptance, come back, retest the top, move down, fill the gap as if we're filling single prints, then bounce back up. Now we try to find the bottom of the single prints as support, bounce back up, and then ultimately come through, retest, and move away. So in a sense, and we're going to get onto this in a second, a block of single prints is the equivalent of a range. Okay, but we're not trading this range. We can do, depending on the size of the single prints. We're not trading it, but this is how it should be viewed, and we'll come on to this a little bit more in a second. Okay, so a gap is very similar to single prints. So that's the reason why we've talked about this here. Okay, and obviously you got that extra little bit of alpha there, by the way, so don't forget that. Whatever New York opens, it's not always the case, but it's normally a counter. Right, back to it. Let's get back up here. Let's hide this and let's zoom out. There we go. Right. Seems all off. Right, okay. So, single prints, gaps. Similar sort of concept. And this is why I trade single prints similar to gaps. So, they don't always get filled, but there's a strong chance that they will. Okay, they act a bit like a magnet. People comment on this all the time. It's a bit like a magnet. It's like saying, when we've got the poor highs and the poor lows, it's like unfinished business. And that's what it's like here. Sometimes you'll see Bitcoin do a giant... In fact, actually, I'll save that for the next section. Remind me, giant wicks. Someone type that in the comments, please. once a block of single prints have formed, each side can be traded as SR levels, like we saw on that SMP example. So we can see here, if we use this as an example, so we've obviously got this block of single prints here. That's created on this day. And the following day, what we've done is obviously we've come back down, we've nuked through, we've got initial balance here, we've ranged sideways, we've then tried 1, 2, 3 times to get into this single print. It's not perfect, don't get me wrong, it's not perfect, so it's not touching it exactly, but we've tried 3 times to get into these single prints. Because people are seeing that and they're seeing it as a magnet and they're seeing it like a gap to be filled, so therefore people will be longing the shit out of this. Okay? Because that's what they're expecting these to be taken. And this is like decent traders, I add, because decent traders know about single prints. You know, not all of them are decent traders. You will get some people that have been half taught this. You know, so some people maybe go, oh yeah, I know what single prints are, yeah, they always get filled, yeah. No, it's not how it works. You know, so you'll get all those kind of people that be longing the shit out of this, trying to backfill these, expecting it to move up, similar to a gap. So, like, for example, you can always tell on a Sunday night when CME opens that Bitcoin tries to rally towards the gap, and it sometimes works, and then it sometimes ends up in a squeeze, whether that's a short squeeze or a long squeeze, because people instantly try to fill it. Okay, so it doesn't have to get filled there and then. So this is what I mean. So now the bottom side of this, because we're trading below it, is now resistance. Okay, it's resistance until it's not. So like any SR level, you need confluence. So if you've got no confluence, it could be a weaker level. It might not be a weaker level. You know, if you don't have any confluence here at all, it might not necessarily be a weak level, but from a trading perspective, if you've got no other confluence, that's not good enough. We're not going to be taking that trade. So, as we just saw on the S&P example a minute ago, so the block itself is similar to a value range. Now, what I mean by this is revert back to, we've talked about it before, the 80% setup, which again, you know, something I don't personally trade, but I know a lot of traders that do. So obviously the 80% setup rule is obviously if price opens outside the previous day's value area, finds acceptance into the value area, then you can look to trade it to the other side. Similar sort of concept with single prints. If price is accepted back into this range, then you could look for it to get to the other side, but once again, it doesn't always happen like that. Okay, it doesn't always happen like that, and I want to make that really clear, because you will get a lot of charlatans and a lot of bullshitters out there that will tell you if you get acceptance back in single prints, then it will go to the other side. No, bullshit. And I'm going to show you a shitload of examples where that doesn't happen, because they're ignoring all other forms of TA. Okay, so keep in mind that. So similar to a value range, we're looking for an extension to the other side, but we might not get it. Okay, so if you took, for example, you know, you saw this come back down here, and then you took a long down here off this wick, for example, then without a shadow of a doubt, if you long down here, without a shadow of a doubt, you would be having a take profit one there. Ignoring any other form of TA, you would have that as your first take profit, because there's no guarantee that it's going to get into these single prints and move up. So you now know that if you've got this on your chart, this could be a new take profit sort of style for you guys, especially if you're intraday trading or scalping. Okay, so take note. So these are the potential setups that you get with single prints, and I don't really normally talk about this kind of thing on my streams, but I want to be really crystal clear with these, because I don't want any confusion. Right, so first and foremost, you've got to block a single prints. I'm going to do some visuals here. Alright, let's just hide that a second. So you got to block single prints. Okay, in fact, let's make it a little bit wider. Oh, we've got a big section here. Right, so SFP, because bear in mind, so we're looking at this, price is down here, yeah, so we're looking at coming up to this, So initially we're looking at the bottom of this as an SR level. Okay, so out of these initial two options, either A, we move into it and we get a reaction and we move away, and then obviously you can look for your structure breaks or whatever you want to do, you know, to enter your short position. Or if you're confident because you've got a lot of confluence here and you see volume weakening into this, even though chances are you're not going to see it weakening into this because you're going to get knobs that are trying to long into it, but you might see volume tapering off, so you might not necessarily see aggressive volume, so you could potentially scalp straight into this here. But for me, obviously a market structure or some form of divergence on CVD or imbalances or something like that obviously give you a better setup. But that would be option 1. Okay, option 2, just like any other SR level, because it doesn't have to be any different. Obviously this is the SR level itself. What you might see is price moves up, comes bounce into it, and everyone's getting all excited and longing the shit out of it, obviously hoping to get to the other side. Bear in mind this is obviously going to look like a really long candle on anyone's chart, and then you get your swing failure pattern and you come back down and then you're off. Okay, and obviously you know what to look for in the swing failure pattern, because you'll see loads of trapped longs, and in this instance chances are you are going to see a lot of trapped longs, but you will also see a bit of a short squeeze happening as well in this instance, because obviously if this has moved down really fast, then you get people FOMOing into shorts on the way down. Okay, so just FYI, you may see some a squeeze going on here, which is why it's a slightly riskier trade, is this, because if a squeeze does take effect, because it's a big move, then obviously you can see that move to the top. Okay, so just an FYI. But other than that, swing failure pattern, obviously if you wanted to be safe, you didn't have to trade the swing failure pattern itself. You could see come back down here, back test, market structure break, and Bob's your uncle or your auntie or whatever you want, and you've got another trade set up there. So off a block of single prints, they're two very good options that you've got. If now this is the alternative, right? Use the same example, we're moving up in price. Let's say you have, let's just make this clear for ease. What else can we have here? Let's have, why not, just for fun, let's have a naked point of control here, and maybe something else, but that'll do for the time being. Okay, so you got a naked point of control and you got a golden pocket right at the top of these single prints. Okay, you see price moving up, lingering around, gets inside, back test it perhaps, then moves up. Now this technically, if you were to take this trade, which some people do, and a lot of people do this, because this is similar to the 80% setup rule, then obviously you've got your confirmed trend, so obviously you can enter along there, but to me that's classed as a breakout trade. I personally don't like to take them. It's very, very rare that you'll see me take this, but I know a lot of people do, so I'm telling you about it. It's your choice whether you take it or not. For me, not great win rate, because again you could still see a swing failure pattern. Okay, so you see price moving up, and then all of a sudden you start getting this short squeeze effect, so you start getting this absolutely speedy fast move up here. People are then going to think it's going to continue forever, because that's obviously what always happens in crypto. It never destroys anyone. And then you come into this perfect level here. You've got a perfect level. You've got the top of the single prints, which is an SR level in itself. You've got a daily naked point of control, and you've got a golden pocket. So in this instance, you've got 3 bits of confluence there to take a short. Now you're likely going to have to be quick with it in this instance. So either a limit or a market. If you've got a limit, you're going to be waiting, so you're going to see that and it's moving up and you're going to quickly enter that limit, but you'll already have your numbers typed in because you've seen what's happening down here and you're not stupid, so you'll already have your number typed in and you can quickly tap it. Failing that, again, you can market enter, and obviously you might market enter and you might end up pulling it down here or something like that. Absolutely fine. You don't have to get the absolute top. That's purely for bragging rights. Yeah, don't worry about time and stuff like that. If you get in here, fair enough, your stop loss is still above it because that's your invalidation, and then you'll be looking to trade it down initially to here. Okay, So that's what you'd be looking to do if it went all the way through. Now statistically, when it's this kind of setup, i.e. we're moving bullishly into single prints, then this typically does initiate a short squeeze. Doesn't always get to the top. Obviously it's very context dependent, but it can get to the top. If it's the other way around, if we're moving down into this, then you're not always going to see that squeeze. You will sometimes see that squeeze to the other side, but you might not, and it might run short. And if it does just run short like this, unless you've got other confluence here, then it's a no trade. You know, if all of a sudden you've got a golden pocket here, and then you've got your naked point of control here, and you've got a weekly here, very rare that that'd happen, but if you did, then, you know, you had enough confluence to take a long, fine, and then that way what you'd likely see is a load of people trapped open for down here, and then you're going against them. So, context is king. Okay, so there are your three type of setups you can get with single prints. Okay, so you'll get swing failure pattern into the block itself. So you got your block, swing failure pattern back out, and move on. The actual block itself is a strong SR level, so tap the box, move on. Or if you do get acceptance into the block, then look for the other side, unless you've got other TA to tell you otherwise. Okay, so if you've got other TA to tell you otherwise, use that other TA, but keep at the back of your mind, this could fill quickly, because single prints typically do fill quickly. And as I say, especially if it results in a short squeeze, because people get overexcited, everyone wants to smash the green button, you know, all the late FOMO shorts get stopped out. It typically squeezes faster in that direction, because it's similar to a cascade when you see a cascade coming down. Okay, so that's how we do it. Now, I know a question that's naturally going to come on the back of this: what's acceptance? This is one of those things where everyone will tell you something completely different. So some people might tell you, oh, I wait for 2 30-minute candle closes with inside this, and that's acceptance, and it'll move to the other side. For me, it doesn't work like that. For me, to find acceptance within that range, in that single prints, that will go back to this example. Let's get this up. Whatever. Aha. There we go. Let's get on to the 1 minute. This. So, let's see if we've got any decent volume on this to back it up. Yeah, as usual, we don't. Shit. So, if, for example, if you saw this happening, bear in mind we'll be looking at this in real time on volume by using the footprints, so keep that in mind. You start to see price moving back into this region on low volume, you know, not many new shorts opening up, this is just longs closing out, but fairly low volume, fairly controlled, fairly steady, then initially you'd be looking for a bounce, wouldn't you? So treating it as an SR level. Yeah, you get the bounce, and then let's say we start coming back down here on higher volume. So we'll start coming down on higher volume, open interest is going up, you get new shorts opening up, and you get this bounce, and then you come back up. And if this bounce here is weaker, just like any typical range, how I taught you to trade, you know, if you've got weak bounce, so you've got not many new longs opening up, you know, it's just meh volume, it's fairly flat. I mean, you can see on this, it's flat as a fart volume. There's nothing going on here, but this isn't great as an exchange, by the way. But if you did see this, then you'd be like, all right, okay, well, chances are it's got acceptance here, and then we're going to start moving away from it, because if you're not seeing a big spike in volume and price breaking back out again, then you've got acceptance. Okay? So hopefully that's clear. Obviously, that to me is acceptance. Right there. So you've hit it, and then you've started to move away. And then right here, you've continued the structure, because obviously you've got your well, from up here you got your high, you got your low question mark,
you got your lower high question mark, and then obviously you've got your lower low, lower high, lower low, lower high, lower low, lower high. Take out this level here, take out this lower low here, and then you've got trend continuation. So you definitely got your acceptance then, and boom, small range up to the other side, bish bash bosh. Okay, so that's acceptance. So any of this, you know, it needs to spend an hour in there, 2 hours in there, 15 hours in there. It's irrelevant. Time is very valuable in TPO because that's the whole concept of it, but acceptance doesn't work on time, in my opinion. It doesn't. Volume needs to back it up. If volume doesn't back it up, then yeah, it's irrelevant. Absolutely irrelevant. Okay, so we've got this. Where do we? Hide and move on. This. Come back down here. Right, cool. Yeah. Also context as well. Another thing on context. I want to make this clear. Obviously, if you've got a trending environment, you've got lots of trending days in a row, and you've got all these single prints, and you start to see, for example, you've got eyes on this area here for a bounce, and you see this bounce, and then you see it coming back up again. Now, this then could line up with other SR levels, but the context is we're still in a strong downtrending environment. Are we really going to bounce up and take out these single prints, or is it just going to act as resistance and continue the trend down? So context is very, very key. Think about the environment. You should know the environment by now. Based on what you've been taught, you should know what your environment is. You should be able to understand what a trending environment is, what a neutral environment is. You know, are we ranging? What are we doing? You know, what time frame are we looking on? You should understand that now. Okay, so context. Another note as well is if you've got a bigger number of single prints, then it doesn't make a difference whether it's a stronger level or not. So I want to make that really clear. So if, like for example, this example is 9. If this was 15, would that make it a stronger level? Not necessarily. It all depends on what else lines up with it. The only caveat to that I would say is if you've got a row of single prints that's for, I don't know, let's just make up a silly number like, I don't know, 200 single prints. That'd be mega. But that's going to be a major move, and chances are that's going to happen on a capitulation event, and it's probably going to get filled. Not necessarily all the way, but chances are it's going to get filled within the same day, or at least the following day. So if it's a mammoth block of single prints, then I'm not necessarily going to be looking at that in the time of, oh, that's not going to get filled, because chances are it's going to get filled quite quickly. Okay, so in that instance, we're just going to ignore it and say, well, alright, okay, chances are it's going to be a tail rather than a single print, and we'll get onto that in a second. But yeah, don't treat either side like an SR level. Okay. No time frame. So this could get filled the following day, this could get filled in 3 years. Okay. But either way, if it's still present, it's still present, so it still acts. So even if a week's passed or 2 weeks passed, this is still present on the chart. Until it's completely taken out, it's still there. So be aware. Okay, so that's that. Hopefully that makes sense. If it doesn't, shout up at the end. Next, tails. Arguably more important than what we've just discussed, and you'll see why. So, quick refresher. I'm going to have a quick drink actually, hang on. That's better. So, quick refresher. Buying tails are found at the bottom of a profile. Selling tails are found at the top of a profile. If you forget, it's easy because it says ST and it says BT. Alright, also says the number. A tail is made up of 3 or more single prints. Now this is the rule that I stick with. This is a rule that comes over from traditional land, but this also works really well for crypto because pretty much everyone sticks to this rule. So if everyone considers a low poor low, better, way better. Okay. Obviously, as we said on the introduction to TPO, not all days have them. It's key. Yeah. Obviously, if you get a perfect day like this, it's easy. You know, you've got a clear range bound day. You know, you've got sellers stepping in here, whether that's sellers taking profit or new shorters, you know, stepping in here, and then when prices come down here, you've got buyers aggressively stepping in, which is causing the wick. Now, obviously, we can see here, obviously, we've got the volume here. You know, the volume won't necessarily be sky high, but you want to see some volume. If these numbers down here, for example, were really piss weak, like, I don't know, 500,000, 250,000, million, 1.2 million sort of thing, these sort of levels, then you'd be thinking, well, that's a bit piss weak, that. So there's not, even though it's created a tail, there's not been a massive demand. So that's the other side of a tail. Look at your volume and put it into context with other days around it. That's how you know if it's a volume, by the way. We talked about this the other day in the Discord. You know, when I say, oh, look, we've got a substantial amount of shorts coming in, or a substantial amount of longs coming in, and some people might look at the volume that's happening in real time. You know, let's use this here as example. So that this downwards candle here, we've got 68 million. Now, am I knowing that 68 million is a big number? No, all I'm doing is I'm quickly scanning my eyes to the left and going, is that big in comparison to an average of what's going on? Yes, fairly, for the time frame. So since New York opened, that's been the biggest candle. Okay, so since New York opened, that's been the biggest candle at 68 million. I'm hoping you guys can see that on your screen. If not, we'll zoom in a little bit more. Okay, so yes, that was a big candle, and that was a big amount of negative delta. Yeah, again, we look left. Yeah, so since New York opened, yep, biggest negative delta we've had so far. Okay, look back over the rest of the day. The biggest candle so far that we've had is this candle here, which was 71 million with positive 17 million. So yeah, again, this is a big candle. Not the biggest, but the volume size, I put it into context of the day. So again, that's a little bit of extra alpha there, which it's not part of today. But yeah, this also helps with this concept here. That's how I know if something's decent volume or not. Put it into context. Next, tails. So there's a lot of writing here. I apologise, but we're going to go through and I'm going to try and make it as clear as possible. Right. Okay. So a tail signals or signifies price balance or fair price. So obviously you've got within a range. Within a range, just quickly draw it here. Then obviously you have your price movement within this. Yeah. And if this is all value, so this is value area high, this is value area low, then this is all value. So this is fair price. If it comes out of fair price and then quickly comes back in, then that's not considered fair price. Same as down here, if it comes out, that's not considered fair price, or it's also considered an imbalance, and it comes back in until traders are happy to continue trading at this. And that's how trading works as a rule. In fact, as a rule, that's how it works. You know, you get a range in behavior. Fair price, fair price, fair price. Price moves out of a range. Okay, so there's still interest. All right, okay, so this is now, oh, there we go, I've got a new range. This is the new fair price. Okay, that's how it works. And this is the concept of tails. Okay. Price will move until people are happy with it. Then it'll range. Price will then move, and if people aren't happy with it, it'll come back into that range where they were happy with it. Hence, a ranging environment. Hence, range traders better than any other trader. When you get no tail on a chart, it's considered a poor high or a poor low, obviously depending if it's on the top or the bottom. So a poor high or low shows us that traders aren't aggressively buying or selling the level, and therefore we can wait to see wait until we see Sorry, my poor English. We can wait until we see buyers or sellers step in. So this is going to tie in with a bit of psychology. I'm going to come back to this. We're going to read through it first. A tail is an early indication on local bias. However, it doesn't mean that that level can't be taken. So just because a profile has got a tail on it, it doesn't necessarily mean that that level can't be taken. It just means that there are people willing to step in there and trade in the opposite direction. Okay? So, we're going to come back to this point here, and we're going to do it with this example. And what happened yesterday with the trade that we got off the weekly level was similar, but not in TPO sense, but basically to do with being impatient. So here's an example here. So price stopped short at a major SR level, just like it did yesterday, right? In fact, let's whatever. Let's hide this. Let's draw this out. Visuals. It's all about visuals. Right. Here's our major SR level. Yeah. Price comes down. Price comes down. And we stop here. And we stop here. And we start ranging. We get, well, in fact, let's do this properly. So we come down. We wick down to here. We front run that level. Bounce back up. And then we start ranging. Okay. Now, obviously, if there's got a couple of wicks down here, then this will be classed as a poor low. Great example. And we're ranging here. Now, the reason why price might have stopped here is because it might have been like the example yesterday. It was a 1-to-1 extension that we had, and it fell short of the level. Now, we know that this level here is a key level. Now, if the daily closes here, where's my vertical line? I don't use it, that's why. Here we go. Daily closes here, and now we've got a poor low, because that's, for example, we'll say we've wicked down into it again. So we've got a poor low. Now daily open here happens. Now we know we've got a poor low. We've got aggressive buyers actively longing the shit out of this because they're scared, they don't want to move. They didn't manage to catch this wick down here, even though nobody's got any idea why it stopped here. But we've seen this range and we've jumped back in. We've jumped back in long, and we're just longing, and we've got a clear invalidation here. Great. And then over leveraged wankers will be, with stupidly tight stop losses here. Okay. New day opens, and what do you think happens? Poor low, liquidity, impatience. We drive down, we tap the level, or we might even go through it a little bit, come back up, reclaim, and we're off. Okay. So in this instance, in this example, we had a poor low here. So a smart trader is going to see that poor low, put this into context with the fact that we've got a key SR level below it, and think, well, if you were a market maker and you needed some liquidity right now, then you've got the perfect spot, haven't you? Because you can just drive price down, grab all this liquidity, clear up the lows, create a nice buying tail, and then we're off. We're off to the races. Yeah, so it's all about context. So this is a great example. So price stops short of a major SR level and closes the day without that tail. Now we can predict then that the following day we're going to clear up that poor low because of where we are. So we'll clear up that poor low, get a nice sweep, whether that's a swing failure pattern. I mean, if this did happen, by the way, if this did happen on the level and you start seeing this, and then we got this daily close, same concept again. If this would then be considered definitely 100% a poor low, because obviously we've got ranging behaviour, you've got no wick to the downside. So the following day you'd expect, oh, we've got a poor low, well, yeah, let's just take it out, clear it all up, take all the stops, and we're off. Okay? So this is why poor highs and lows are awesome. They are awesome. Okay? So impatient buyers and sellers, stopped out, liquidity sweep. Patient traders or experienced traders or whatever you want to call us, we're happy with that, because that is just bread and butter. If you see that at the bottom of a range or whatever you're trading, then you're going to take that all day long. But context, it's all about context. Obviously, if you're in a massive down, crazy trend that's not let up for days, you know, you've got to take it into context. You know, is it going to continue down? It could do. So if that's the case, you know, if this is the case and you've been in a crazy downtrend and you've seen this, you got a poor low and you're like, is it going to continue? But then what you do is you see this in real time and you see this come down, swing failure pattern, come back up, reclaim. You've got your trigger there for a long. You don't have to catch it down here. You've got your trigger there for a long. On the TPO chart, it's very early in the day, but you've already got a buying tail. The day's already got a buying tail. So therefore, in context, even if you are in a massive downtrend, you've already got a buying tail, which is a fairly positive sign. It's not saying that buying tail's in for the day, because it can still easily be taken out, but it just gives you that extra confidence. And this is what I was saying about TPO or imbalances or anything to do with the footprints. You might not necessarily see what you want to see in real time for that perfect setup, but if you see it after the event, so obviously right now you've seen this, you've come back up, you've placed your long here, you've got in at longs, you've seen your break, and then you look back at the chart and you're like, oh yeah, great, it's created that, hasn't it? Cool, yeah, because this 30-minute candle has finally closed out up here, created a buying tail, and we're off. So after the event you've seen it. It just gives you a little bit more confidence to stay in that trade. If you didn't see it, then you know you can cut your trade early. You don't necessarily have to wait until you full stop loss. You can cut your trade early. So this is the beauty of it. This one, be really clear about. Okay, so that's one example. Zoom. Yep. Right. This example is awesome. Right. So price is trending. It's trending bullish apparently. Double trending. So it's like super bullish. Where are we? Come on. Price is trending. Price is trending bullish. There we go. Each day creates a buying tail, but poor highs. So we're using this example here. So what I'm going to hide this for the time being. I'm going to spread this out. Okay, so this is the movement. If memory serves, this is the run from 29k up to 69k, if memory serves. So we're trending bullish. In fact, yeah, because we've just had that initial move down into the middle, and then we're moving up for the final leg. Each day creates a buying tail, but no selling tail. In context, we've just had a big run up and then a big drop down to a key level, to a KSR level. And if memory serves, there was a near key point of control there, and it was the 0.5 fib. That's off the top of my head. I'll go back and double check that in a minute. And then we'll create this range, and then we start to see this. So context, we're in an uptrend. We have been in an uptrend. We have just taken a harsh pullback here, but overall we've still not broken structure, so we're still technically in an uptrend locally, right? So impatient traders attempt to short each high thinking the top is in, only to be stopped out. Patient traders waits for selling tails for early signs, then a market structure break or whatever. And what do I mean by this? So poor high but buying tail. Next day price moves up and we have a trending day because we've got single prints, decent buying tail straight away, and we move up. Cool. So we know we're in a trending day as well. Don't forget that part. We're in a trending day because we've got single prints at the bottom. Yeah, move up. We've still got a poor high. People are starting to short this now because we're coming into the range highs here. Yeah, the range highs. People are starting to short this now, and I'm thinking, well, maybe not. Why are we shorting here? Because in context, we're starting a trending day, and we don't have aggressive sellers coming in yet. We didn't have them here, and we still got this poor high to take out. Again, all context. What happens? We open up, and then we have another trending day. Bang, single prints, 22 of them. Bang, 50 prints, 50 single prints, and we range again. oh, look what happens. Another poor high. Is topping yet? No. So what's happening is people are shorting here, people are shorting here, people are shorting here, people are shorting here. And again, people are just shorting everywhere, left, right, and crazy. It's crazy. And all it's doing is continuing to squeeze up. This whole move was significant squeezing. But you need people to do that. Just as an FYI, you need buyers and sellers. Remember, it's a zero-sum game market. So for every one buyer, you will always have one seller. Okay, so you need people selling into these moves to make price move. Okay, so don't forget that. So as much as we take the piss out of them for trying to counter traders, we need them, because without them, markets won't move. Okay, it'd be a fairly boring world. So we see this. We've got no selling tail. Again, cautious. We start to see a ranging behaviour. You know, we've kind of got a neutral day here, but obviously without the tail. So cautious. And then we see this day. We try to move up again. We take out these highs. Cool, great. And then we start to see a selling tail. So we're now thinking, all right, okay, context. Well, maybe this is now a level. You know, have we got other forms of TA around here that we can call upon or not? If we don't, then let's just see how it plays out. Let's not get impatient. So then we come back down. We test these lows again. We take the liquidity. You know, we swing fail these. And we continue the move up. Close the day, no tail. Open the day, slow bleed up. A little bit of a double distribution day, but it's not perfect. But double distribution day, i.e. we've got range at the bottom, we've got single prints in the middle, and we've got range at the top. And again, we continue. Look, we just continue. We continue. So this is why this is key. This is key, and it's down to context. So this is how I can sit on my hands in a trending environment and think, I'm not ready for shorting this yet. I'm not ready for shorting this yet. I'm not ready for shorting this yet. So in this example, where would I be ready for shorting it? Well, quite simply, we hide this. Quite simply, once you get your drive up and say you've got a key level, so this is your key level, and price is moving up, creating all these poor highs, poor highs, poor highs, poor highs, and everyone's shorting, everyone's shorting, everyone's shorting. And we get to this key level, we do a swing failure of this key level, which then creates the first tail, and it's at a major level, and you get this selling tail. Now, if you didn't catch that, absolutely fine, but that's stage one. We've now seen that people are aggressively stepping in, and we've got volume statistics on the side to back this up, that this is a strong tail. So all of a sudden now we're thinking, all right, okay, well, if that's the case, then let's wait for a market structure break. What time frame are we looking on? Are we looking on a high time frame? Are we looking on a low time frame? You know, so we start to see pull back, and then we come back out, we retest the level, and then we move away from it again, and then all of a sudden we've got the break. So we've got the short entry. Awesome. So yeah, okay, we've missed some of the move. Absolutely fine. Obviously in this context, what I've done there is I've actually broken the level there, but you know, that'll give you an entry. But by the by, you've now got your market structure change, so you've seen this initial happen here. You know that sellers are actively coming in now and actively participating, which they haven't been doing all the way up here. So the big boys have now woken up. And then you've seen the market structure change. Maybe you've come into a golden pocket here, for example, or whatever it'll be. You see the back test and you moved on. So all of a sudden now, your probabilities for your short playing out have just gone up tenfold. Rather than all these little shorts, you might have been scalping them, absolutely fine. If you had reasons to scalp them, absolutely fine. But the probabilities of the trend continuing, because you had no tails, no selling tails, was just to continue and let it continue. Let it continue. You've seen trending days, you've seen the slow bleed days, you know, you're just letting it continue up until you start to see the aggressive seller coming in, the bears waking up and going, oh, aye, we're too high, that's short. Okay? So this is why tails are awesome. Awesome. Same if it's the reverse, if it's the opposite way. You know, if you look at in bearish structure, obviously right now, obviously we're bearish trending. Similar concept. Where's this? There we go. So this one here, same idea again. Obviously this is quite recent because this was the absolute bottom that we've got at the moment. And same idea. So obviously these were more slow bleed days, these weren't trending days, but context was is we're in a downtrend because we've just lost the macro range. So we're seeing the macro range, you know, we've come back down, we've lost, we've created no tails down here, but we have got selling tails. We've come back down again, we've not created any tails, but we do have selling tails. We've taken out this little bit of a liquidity sweep, a swing failure for the previous day. Come back down, not quite taking out these lows. People are starting to get bullish again, longing the shit out of this. And we came back down, and as we know, this region here, we were hammering up again this point of control that we're coming along here. Hammering it, bash, and then obviously we nuked. Yeah, so context. We had all these poor lows in a row. As a market maker, are you going to let them stay there? No chance, and especially when they're in a line. There's liquidity here. There's so much liquidity, and this is the visualization of the liquidity. The single prints, 28 single prints. So that moved through this area so fast with these single prints because of the stops that were in this area. Because you've got people thinking this is the bottom's in. Now if you were playing this and you were like, oh yeah, I've got a reason to long here, and you take that long, great, cool. You might take some profits up here, you know, like a sensible trader, and you come back down, you add back in, and then you see up here and you take more profits. Great, cool, absolutely fine. But the actual stops that are resting here are people that are longing this and hoping that that's the bottom, because that's what Twitter says. It's the bottom. YouTube told me it's the bottom, so I'm doing it. I'm longing it. My stops here, you know, and let's be honest, in this example, it was too fucking obvious. Excuse my French, because that was 20k. People really think that psychological level at 20k was going to hold, when really that's all it had. It was a psychological level. All those stops, juicy liquidity, thanks very much, bounce back down. Okay, so visual. You see it. You see the liquidity here. And this is the context of the poor lows. Okay, so I'm not willing to take a long off this. Unless I was trading this, I wouldn't be looking to take a long off this until I saw that taken out. And even now, we're still left with poor lows. So even though prices moved up and away from it, we are still left with poor lows. Doesn't mean they have to be taken. It doesn't mean it has to be cleared up. But if the context continues with a downtrend, then yeah, let's look to take those out. Okay? Hopefully that makes sense. And obviously this is just a bit of a, I suppose it's a bit like a disclaimer in a sense. Yeah, tails don't always tell us the information we're looking for, and that's the God's honest truth. They don't always tell us the information we're looking for. So as much as these are great examples that I found, you know, within this and within normal days and within sideways days, they don't always give us the right information. But this was a perfect example, and this was obviously very recent. This was a perfect example because we're in a trending environment. So rather than being impatient and trying to short everything and hoping for a swing, wait for a little bit of confirmation. And this is high level confirmation. This isn't, you know, breakout and back test. This is high level confirmation. Okay, because not everyone's looking at this. Right, that's that one. Next, double distribution day. We're going to go on for longer than an hour, boys. I apologise. Double distribution day. Refresher. Price resembles capital B. B. Yep. A neutral day followed by a quick move, which is a block of single prints in the middle, and then PA creates another neutral day at the end. Loosely speaking, it's a neutral day, but obviously it doesn't have the value area and it doesn't have the initial balance. But yeah, nice and simple. Neutral day, single prints, ends with a neutral day. Okay, that's a double distribution day. And ideally, this is actually a really bad example because there's no tail on it. Ideally, you want a tail on either side, just to make it look beautiful, but you don't always get it. Right, so strategy. Now, the strategy on this is basically, it's to do with the variation of how I trade single prints. So you guys know how I trade single prints. Yeah, you know, you've got an SR level on either side. If price does come in and does manage to get to the other side, then I'll treat the other side as an SR level too. Okay, with a double distribution day, I won't. And this is the difference. The other side is no longer a high chance counter trade. Right, I'll show you what I mean by this. So the double distribution day needs to be perfect. I want to stress that. I want to absolutely stress that. Now, by perfect, I don't mean about the buying and selling tails, but I mean about, you know, your decent initial balance in the first place. You know, basically a neutral day. A neutral day. Block of single prints followed by effectively another neutral day. Okay. If this doesn't look right, if you can't see this clear structure with the single prints in the middle, then don't class it as a double distribution day and ignore this. Okay. So if price action is accepted back into the single prints, then we'll look for a move to fill the single prints, and I mean to actually fill them this time. Again, there are cases outside where it doesn't happen, but this is an actual strategy which comes from traditional land, and this is how people trade it. Again, similar to a gap. But the difference is here is once the single prints are filled, we can be looking. My God, how bad's my English today? We can be looking. Is that right? I don't know where we've gone now. I don't even. It's really bad English. One single print's filled. I can look for P. Wow. You saw that I've gone over this so many times today. We can look for P continuing. There we go. It's better English. Alright, that's the Yorkshire coming out of me. Bad spay. Bad spay. If P is accepted back into the single prints, we can look for a move to fill the single prints. Once the single prints are filled, we can look for PA to continue into the range above or below. Okay, so what do I mean by that? Here's an example. So, double distribution day. Weirdly, followed by another double distribution day. Not as perfect, but it did actually work. This is quite common, by the way, to see two in a row. It's quite common. But the actual daily setups, you don't see them very often. So when you do see them, you know what to do. Right, so obviously we've got neutral day, single prints, neutral day. Open up the following day, and we continue a push up. Neutral day, single prints, neutral day. So we've got two back to back. Let's ignore that this, for the time being, is a double distribution day too, because now we're concentrating back here. So this is what's going to happen. So we're going to see price come back down, and ideally you want to see this happen relatively quick, like we're within the same week at least, ideally sooner than a week. This is a great example. Miss a day, and then this is when it happens. This is when the fun happens. But it can happen within the same day or the day after. But this is quite common. So price opens up, price drops. Price drops, price drops, price drops. And what we can see here, which we can barely see, but we can see a wick into the single prints. So there's a wick here that comes into the single prints. And then we work back out. Okay, so we've got the rejection, we've got a bounce. Right, but it's a double distribution day, so we're not necessarily looking to counter this right now. We come back in, we fill it. Then we range within it. Then we move back out of it, and then we nuke back through. So obviously right here, the single prints are filled. This is no longer needed to create to fill those single prints, but then we nuke back through, come back down, create a new buying tail, and we move up. And then I mean, look at this, where we move back up to, we move back up to here, and we get a rejection, which is the daily time point of control. And funnily enough, it lines up quite well with these single prints. Now, that's a side note, so we don't need to worry about that. Obviously, this is where it's reacted at the end of the day, and obviously it's reacting quite clearly. It's working through this point of control, this volume point of control just below it. So, if this was a standard day, and this wasn't a double distribution day, and you saw this, then initially you could look, if you had confluence, to take a long off the top of these single prints here. If you then saw price come into the single prints and come to the bottom of the single prints, you'd be then looking to take a long down at the bottom of them. and then to catch the move reversing on itself. But because it's a double distribution day, we don't do that. Okay, that's the key. That's the key with it. We don't do it because it's a double distribution day. So people are looking for this to come all the way through and get back into this range at the very least. And chances are it could then continue, but obviously we don't know about that because we don't have a crystal ball. But the idea is you go from one side to the other side, move away. When you come back, you want to go from one side back through to the other side. That's the concept of it. Okay, so the potential trades that you've got. So you're either holding a long or a short throughout the move anyway. So i.e. maybe you've got a long down here. You've seen this create. You've seen this move up. You've seen potentially some toppy action here because you come into a major SR level up here. So you're taking profits. And now you're thinking, all right, okay, so now maybe it's time to hedge because we've seen this now. Once this day's opened, we've seen this. So now we're looking, where do we get in? Where do we get in to hedge yourself? We've taken profits on our longs. Now where do we get in? We find this, we've come into a KSR level here. So we short the market. You know, we've got the confluence there. And lo and behold, we trade it exactly like a double distribution day, and we'll trade it all the way back down to the bottom of this profile. Okay, so that's holding a long or a short throughout the move. Yeah, so obviously you're already in a position, you're not actually trading within it. You can take profit at the single prints block. So obviously as it comes back down here, you can take profit one here, just in case it is not a great double distribution day. You can take profit there. You can take profit the other side of the single print block, and then you take profit 3 I've put there with continuation, and that will be with continuation to the bottom here. Okay, and obviously flip it if it was a long scenario. The other setup you've got is no trade. If you are not in one of these trades, i.e. a long and short from either side, then you've got no trade, in my opinion, because you don't want to be trading the breakout of this. Even though you technically, your success rate, once it comes back in, your success rate is quite high getting from one side to the other. But you know, a block of single prints that are only 10 blocks, it's not really a big move. And in percentage terms, the chances are it's not even a big move. You know, if this was substantial, maybe, but again, you're trading a breakout, so it's a really shit idea. You're trying to follow the trend, and what if you're wrong? Just because this is a double distribution day, it doesn't mean it's going to play out exactly like this. You know, sometimes it doesn't. It's just statistically, the chances lean in the favour if it plays out like this. So for me, this is your only option. You're already holding a long or a short throughout. Aside from that, no trade. Okay, don't look to counter it. As I said, if this was a standard block of single prints and this wasn't a double distribution day, then when price came back down, I would happily, as long as I had confluence, have a trade off the top. And if that went wrong, then I'd happily have a trade off the bottom. Again, as long as I had confluence. But because it's a double distribution day, I'm not going to counter that. Okay. A few examples, and then we'll move on to questions, and we'll call it quits. Right, so this one, just another example, is this of single prints. So obviously we've got a row here of 23 single prints. Price moved up, created these single prints, trending day, moved up, range bound. We'll come back down. We've done a swing failure into these single prints, and then bounced off it. So again, this is obviously one of the options that you had with single prints. Either get a reaction straight on the line or get a swing failure. The only thing is we've got this swing failure, we'll come back out, we back test then the top of the single prints perfectly, and we move on. Okay, so great. If you had more confluence here, so for example you got your golden pocket here and something else, then you know you've got a trade there, you've got a counter trade. This is an example of where you don't always see it working as an SR level. And this again, this is my no bullshit approach. You know, it doesn't always work the same. So obviously you got these single prints here. Daily's opened here. Daily's open bearish, and we're starting to move down straight away. We're already moving down, so already having a counter trend day instantly which, you know, to go up and then to come back down and fully retrace this move, by the way. This is not what you call bullish. And you've got this row of single prints, so we're nuking through here, and as you can see, the nuke then moves into this block of single prints, and it doesn't get a reaction off the top, it just continues. On absolute tiny time frame you might see a reaction, but within TPO, within the 30-minute candle, no reaction, it just comes through, it bounces in a random place. Look, we're bouncing in a random place, that's not even within this profile here. That's nothing. And obviously it just coincidentally lines up, by the way, with that volume, with that time point of control. But this is a separate screenshot, nothing to do with this. Bounce back up, and then we continue nuking through. And what we see this time is we actually do get a reaction off the top of those single prints, only a tiny reaction. Bounce back up, and then we proceed to nuke through. Okay. And all this time we'll create new single prints, by the way, on this day, which then this wick takes them out. Okay, so it doesn't always work great, and this is a bit of an extreme example. I'll give you that. This is a very extreme example. Day 1, pump up, big trending day. Day 2, retrace the whole amount. Doesn't always happen. It's just not the strongest of scenarios. Final example. I'm just going to hide this. I'm just going to hide this, and you guys know what this is. Anyone that is an OG follower of us knows what this is. So this is July 21. So this is the last day on the back of that absolute epic range that we were trading between 29k and 40k. And this is the where it all happened. This was the magic happened. And this is one of the reasons why I took that trade, and you guys have never seen this, because I want to wait. So this is only one of the reasons. There's many reasons, and we'll talk about it in the future. But we've got a double distribution day here. So the day before we had this double distribution. By the way, we had loads of patterns and we had loads of reasons to take this long, but this is part of the thinking. So we've got a double distribution day here. Not perfect, but good enough. We can see it on the TPO, and we can also see it on the volume profile. Yeah, so price opens up, range creates a neutral day, then we move down, single prints, neutral day. Following day opens, we push away from this, then we start ranging, and down here we're starting to see some significant bullish CVD divergences, which is one of the main reasons why I got into this long. And knowing that everyone was shorting this breakout of the bottom of the range. But we had a double distribution day here. Everyone had flipped mega bearish. Price had already retraced more than 1 point to the 1.1618 on the macro. So there was a good chance that it wasn't going much lower at that point. Loads of other factors. So obviously we got in this long here, and then we got in this long here in context of this double distribution day. So what do we think is going to happen? Well, what did happen? Following day opened up, we start off with a trending day. Boom, 25 single prints, great stuff. We get back into this range. Range number 1 of a double distribution day. We range. Then, boom, we go through the single prints, get the acceptance, and get the end all in one go. Then we range in this top range. And then, lo and behold, we obviously continued on after that. But yeah, so this just added to it. This added to it. And for anyone that's unclear, this is... let's use, which is clean. Is this one clean? That one. Yep, that's clean. So this is from here. So obviously 65k, moved down, and obviously we had this absolute awesome epic range down here. There we go, it's different because this is Coinbase, so I'm not quite comfortable with this one, but that'll do. There we go, that'll do. And that profile is from here. So this day here was the double distribution day. Then we got the move down where I took the long. Then the following day, boom, cleared out that double distribution date and some more, and it moved on. Okay, so just partially one of the reasons why we took that long. Go to that. Cool. So that's that, and that's obviously the thought process behind it. Okay, right, where's all my stuff gone? There it is. Summary. We did it, guys, we did it. So single prints often act like magnets, similar to gaps. So they don't have to be filled, but everyone treats them as, yes, they do have to be filled, so therefore that's the mentality, and that's obviously what can work in our favour. Buying tails and selling tails can help us with FOMO. Again, that comes down to the trading psychology. You know, don't get impatient, don't enter a trade. Don't get me wrong, you can still see a full-on trend reversal without a tail. But if you see the tail, it's just extra confluence. Just adds to your theory that you're right. Okay? Gives you a little bit more comfort knowing, yep, I'm going to let that run a little bit longer before my take profit one. I'm going to treat this as a swing trade, as an example. Okay? So it can help us with his emotions, with his FOMO. Double distribution days, don't trade the single print similar to regular days. Don't do it. Be strict. Everything is traded in context and with confluence. And I'm going to bang on about this every single stream from now on, because it's key. It's key. Context is key. Confluence obviously is given. You guys know that by now. But context is key. Okay. So I've waffled on for an hour and 15 minutes. Is there any questions? I'm going to have a quick drink of water. Pop any questions in the comments, and we'll run through them. Okay, guys? It's quite difficult, the streaming, because the delay between me speaking and you guys actually getting the sound is extreme. It's you can sit here in absolute silence from my perspective, waiting for you guys to type something, but you've not even heard the question yet. It's mad. Don't know how these streamers do it. Enzo's typing. Come on, mate, type faster. Bum, 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 bum. Right, okay, yeah. I did briefly mention it, because then I went on to waffle about something else. About to do with taking it in. Ooh, didn't want that. That's the stream link. Hang on. Copy. So, like that. So, can you tell some more about the volume on the tails? When do you consider it worthy to incorporate it in a trade? So, like I said at the time, mate, you might have missed it if you did go back and watch it, but basically it's to do with context. It all comes down to context. So the screenshot that you could see, which one did we talk about it on? Was it that one? No, that one. Yeah. Was it this one? Yeah, this one. So obviously you can see here, obviously you've got your volume here. Now, just looking at this as a standalone, we don't know if these are big volume or not. I mean, I can tell from experience that these here are larger volume. But you've got to put it into context. So I can't give you a static number and say, oh, this 3.6 million, that's massive. Yeah, definitely incorporate this. This is huge. I can't tell you that, because it all comes down to context of what's happening, A, within the day, and B, within the days either side, ideally within the week. Okay, so similar as we talked about when I was ranting about it, for example, this candle here was 68 million. I know that that's a big candle because I'm putting that in context of what's happened before it. So before it, in today's session, there's only been that 68 million. Oh, we're going to get that daily level, by the way. 68 million, and there's only been one candle today so far that's been larger at 71. So that is a big candle. Yeah. So if we look at the TPO, and we look at, for example, today's selling tail, 13k 3.2 12. Yesterday, 103k 2.4 6.4. Okay, so similar in a sense. Here, a little bit more, 7.4, 5.7, 4.1, 1, 200 and odd k. So stronger, and we can see that. We can see that because obviously that is the high that came in, which we shorted. Okay, so these numbers in comparison to these numbers are higher, albeit there's one of these numbers that's 12 million, but overall we've got higher. So you just put it into context of what's happening at the time, because these tails will be completely different to the tails that were up here. In fact, I don't even know if it'll go this far back on desktop now, but so for example, if you looked at the tails up by 69k and what was happening around there, you will see that the tails are potentially different in volume. They might be higher, they might be lower, but there will be a difference between them. So look locally, look what's happening around you, look what's happening within the day. Is this a big number compared to these? Is it not a big number compared to these? Okay, chances are you'll still see this tailed off section, because that's just how order flow works. That's just how limit orders and everything else works. But yeah, you've got to put it into context. So I can't give you a static number, unfortunately, and that'll happen a lot with trading. I can't give you this number is a big number. I can just tell you roughly that, yeah, okay, within context it is or it isn't. Okay, so hopefully that makes sense. I know it's not a straightforward answer, but yeah. Any other questions? Enzo coming back. Alright, so that's that one. Just stick around for one more minute, guys, see if there's anything else coming in. Cool. No worries, mate. No worries. Right, that's answered. So, next stream, live chatting as usual. We'll make out some plans. Yeah, we'll see where we're up to. I have a sneaky suspicion something is going to happen on that Tuesday, so be prepared. It's not a time pivot, but it's to do with the channels that you guys know what I'm looking at with the channels. After that, then, as I say, I'm going to try get the rest of TPO wrapped up in one, but it might have to go into two. But effectively, what we've got to look at is, not them ones, these. These, you're going to like these. So these are individual session profiles. Similar concept, but we don't treat it exactly the same. But this is obviously sessions. So you've got Asian, London, New York pre-close, Asian, London, New York pre-close, and so on and so on and so on. It's breaking the day up. More for intraday and scalpers, but they can be very interesting, shall we say. Alright, and then we'll also look at some merge profiles and a few other bits and pieces. Okay, guys, awesome stream. Hopefully that made sense. I know it's a lot to take in. I'll let you guys know when it's uploaded tomorrow on the website. Watch it again and again and again and take notes. take screenshots, do whatever you need to do. Alright guys, take it easy, and I'll catch you tomorrow. Cheers, bye bye.